So we'll start with those general principles of financial planning. Number one, data gathering. When you have a business owner, you need to change your data gathering questionnaire or whatever you do to include some additional things. Number one, financial statements. And this can be a huge problem area. A lot of businesses do not have good books, and it's almost impossible to tell what they're making or if they're making money. But you do need to get those and kind of learn what you're looking at. Obviously, business tax returns, not just the 1040, but I like to see those corporate returns, those LLC returns. You'll want to take a look at operating agreements, shareholder agreements, incorporation documents, bylaws, buy, sell, all those type things. Sometimes you'll ask for them and they can't find them. These are things that some lawyer may have done for them 10, 15 years ago. But you need to take a look at these, at least become familiar, read through them, understand what they contain. We're not asking you to become an attorney, but you want to be familiar with what is in an operating agreement. The 401k, pension summary, insurance, those are things you're going to collect from a regular employee as well, but we may get a little bit more detail for the business owner, especially on that 401k side. You want to know all the provisions in that. So moving on to goal planning, for a lot of business owners, the concept of, hey, I'm going to work here for 30 years, 40 years, and then retire, really, they don't even understand what you're talking about. And so when you try to plug them into Money Guide Pro or something like that, they're going to have these wild goals, and they're going to conquer the world, and their company is going to be, the greatest thing. We run into that a lot. Don't tell them they can't do that. Help them figure out what they need to do to reach it, and understand that they're not necessarily looking to retire from what they do, and that's not something that really is going to resonate with them. Now, some may be looking to sell and do that retire, but it's a different type of planning. Along with that, we find it very useful to sort of solve for the business income or sales price. What do I mean by that? So with a lot of people, you're planning, you say, okay, you work at this job and you're going to get raises, and here's your portfolio. You're going to make 5, 6, 7% a year, whatever. And these are the things that you want to achieve in life. The business owner, sometimes they're going to give you these wild goals, and you're like, there's no way you're going to be able to achieve that. And so what we'll do is we'll model a business sale or an income, and we'll come back to them and we'll say, okay, great, you want to do all these things. What you need to do is your business needs to throw off, $400,000 a year for the rest of your life, or you need to net after tax from this company, $5 million. So a lot of times that's the way to approach the planning, is solve that question for them. What value does their business need to provide, rather than looking at it today as to what it is providing? I always encourage my business owners to pursue a dual strategy, which is to become financially independent in the traditional manner. Hey, save a lot of money, keep your expenses low, accumulate a portfolio, stocks, bonds, real estate, those type of things. And then the second strategy is to succeed in business at or beyond those expectations. Moving on to cash flow, a lot of times they'll come in and their salary will be like $100,000, and they'll be living this huge lifestyle. And sometimes if you're not used to working with business owners, it can be hard to figure out where's all this money come from. And so I've listed here the 4 main areas: their salary, of course, those profit distributions, and then the non-cash benefits and those pre-tax lifestyle costs. And that can add up to a significant amount of money. These are some of the areas that you'll see people take out of the company that may not be obvious. They could be reimbursed tax-free for a home office, or the company could be paying for things in the home office. Vehicles are a big one. A lot of business owners have never had a car payment or spent a dime on their vehicles. Now that's a whole other thing on the tax deductibility of that, if they're doing it right or wrong. But for the most part, they're going to come in, if they have any sort of business they need to travel, and they're not going to have any vehicle expenses on their personal cash flow statement. Cell phones, travel. I mean, I can tell you, I never go anywhere. I try not to go anywhere without doing legitimate business when I travel. The computers, internets at home. This is one of my favorites, the Augusta rule, section 280A. You can rent your home for up to 14 days a year is tax-free. And so a lot of business owners will do that. They'll rent it to their own company to have their annual meeting or something like that. And then, of course, the various executive perks. So there's a lot of ways that owners get money out of the company. When you're taking a look at their debt things, make sure that you're not just looking at their home mortgage and things like that. You've got to look at the company and see where they are in the company, the debt. And also, most of the time, unless they're a big giant company, they're going to have to sign a personal guarantee on a business loan. So if they take out a loan for a building for their company, or an expansion loan to hire new people or something, they're going to have to personally guarantee that. And so they may come in and they may not have a mortgage. We see that a lot. A lot of business owners, they'll get some money, they'll pay their house off, but they'll have a massive amount of personal guarantees out there on the company debt. So don't forget about that. Also, the business loans, that a lot of times they'll take a lien on the home. So they may not have a mortgage payment, but there may be a lien on the home. So make sure you're checking for that sort of things. You also want to take into economic considerations, even more so than an employee. While an employee may be affected, if they work in tech and there's a tech bubble, business owners especially are going to be hurt a lot more. Number one, economy in general, looking out for recessions. The industry they're in, I mean, look at what happened with Juul. The stroke of a pen, and a large percentage of their business just went away. Where are their facilities? California, we have clients that a client that had a winery in Napa Valley that was completely destroyed by a wildfire. And of course, here our home office is in New Bern, North Carolina, and Hurricane Florence hurt our little town really bad. And there are a lot of businesses that never recovered from that. So you got to take that into account. Political legislative changes, anybody in the import-export business and all this tariffs going on, it's been kind of a wild ride. And so business owners generally need to keep larger amounts of cash reserves, and the economic considerations of what's going on in the world are going to have an outside effect on them. Here's one of my favorite ones, behavioral finance. I know a lot of you, study this and looking at the way investors look at their finances. For business owners, it's really important. Number one is, just because they're a business owner doesn't necessarily mean they're a huge risk taker in their portfolio. With a company, whether the reality is true or not, you feel like you have a lot more control over things. A lot of things are out of your control, but you do have control over some things. And so they're used to that control. And when they go into the public markets, it feels kind of out of control. And a lot of them are actually less risk tolerant than you would think. Also, I hear this sometimes, like, what do you mean I'm going to put my money in stocks and bonds and only get a 6, 7, 8% return? I've been growing my company at 15, 20, 25%. Why would I do 8%? So just be ready to deal with that. They're also generally going to have that profit and loss business focus. They're used to analyzing numbers monthly or at least quarterly and making adjustments to their business. Like, let's say their profit margin, is normally 25% and it slips to 20%. Well, they're going to make adjustments to their company to get that back up. And so when it comes to the portfolio, sometimes they think they can do the same thing. Hey, we didn't make, we lost money this quarter. So what are we doing next quarter to tweak the portfolio? So it takes a lot of education sometimes in these areas when they're moving away from their business. Communication, kind of the same thing. Not that everybody isn't busy today, but business owners, I truly believe they can never leave it behind. Whether it's at work all day or at home, there's always business things going on, whether they're physically at the computer or on the phone with it, they're thinking about it. And they're dealing with a million things, payroll and employees and customers and vendors and things like that. Make sure you're giving them the bottom line up front. Do you need them to do something, or are you just giving them information? Do you need a decision from them? And always give them options with your recommendation. At the same time, make sure you give them a recommendation. I found that a lot of them are very receptive. If they're not an expert, they understand the concept of hiring experts and letting them and taking their advice. We've had a lot of success, remote conferences, shorter meetings, more frequent interactions. Unlike an employee that gets a job, unless it's open enrollment or they get a bonus or RSUs or something, it doesn't change from day to day. Business owners, that things can change very rapidly, so you want to have frequent interactions. Education planning, just one slide here on this. A great strategy for business owners is employ those kids for a legitimate purpose so they have earned income, and then have them fund their own college expenses. A lot of the business owners are not going to qualify for any sort of financial aid or anything like that. And so this is a great way to fund college at a much lower rate than having the business owner pay themselves a salary and then turn around and pay it to the college. I've also seen, just watch out for scholarships for children of employees, especially the owner. There's a lot of rules. You can get yourself into trouble there.